Happy Thursday, ladies and gentlemen. Allincrypto here to get you through the summer doldrums that markets unfortunately have to endure. And we're doing that by showing you that the technical picture is a pretty one and the fundamental picture is a Goliath in regards to the essentially investment opportunity perhaps that cryptocurrencies have to offer. Yesterday, we looked at what Fed Governor, so this is an individual on the Federal Reserve Board, Fed Governor Bowman had to say, what she had to say on crypto. And she essentially said, despite this past inertia, change is coming. Bank regulators are taking important steps to create a framework for digital assets and the adoption of blockchain technology within the banking system. These steps will promote accessibility to banking products and services by removing supervisory impediments that have stood in the way of bank relationships. She goes on to say, I'm also encouraged by the promise of this technology by its ability to solve problems and improve efficiencies on traditional financial systems. So that was what Fed Bowman had to say, reported on here by Nate Garcia. Actually, Caitlin Long, who is an interesting individual, hasn't been so nice about XRP recently. Why, I don't know. But she actually added another Fed governor commenting on this, obviously at the SALT conference. It's basically all been about crypto, right? She says, pinch me again. A Fed Governor Waller just said there's nothing scary about this when referring to distributed ledger and smart contracts in payments, speaking at the SALT conference. Guys, there is so much going on here, and we try and focus on the crypto aspect of it. But what's taking place in crypto, whether you're interested in crypto or not, is directly going to impact your life, because the reason crypto was given to us was to replace a archaic or dying, I should say, financial system. The dying of that is going to have major repercussions for you guys. And one way to make life a little bit easier in that equation is to be in the cryptocurrency space, potentially as an investor, if it's something that you've come to the conclusion through your own thought that you should be involved in. I'm not a financial advisor. I am all in crypto because I think it is so obvious and has been for a long time that this is the new system. So when we're in months like we're in, the summer doldrums is what we're calling them, it's important to always remember that. And technically the picture is still a good one. Yes, Bitcoin having a little bit of a pullback during a lackluster period. It's nothing substantial. Ultimately, continuation is on the cards. We get that from all the technical work that we've done. We get that from fundamentally what's taking place. We get that from economically, which we're going to dive over to. I want to sort of drill or really show you what Mike Wilson is saying to actually be an accurate case. If you look at 20% plus pullbacks, entire retracements of those pullbacks, like the one we've just seen, and he called that the bear market into a new bull, typically lead to periods of great progression for the markets for a number of years. That's a great macro backdrop to see Bitcoin do well. It confirms everything that we're looking at technically. We're at a time when BTC Dom is on the cusp of rolling. Please don't look a gift horse in the mouth with what we've got here. People get too fixated on day-to-day price action. Time is your best friend or your worst enemy. Use the time. You make your money in the time spent in something. Use it wisely. Don't spend it procrastinating on day-to-day price action, which is irrelevant in the broader scheme of things, which is very clearly up. So Bitcoin still looks good. Ethereum might be on the turn. It was a major key moment that ETH sort of broke out of this capping trend line. And actually, it doesn't look too bad on the smaller time frames at all. I'm going to show you that just now if it decides to load. You can see this is a very these are all textbook pullbacks, but the pullback Ethereum has recently been in its textbook. Essentially a broadening like structure that ultimately, this is likely going to lead to upside. And I think there's lots of altcoins that are set on that, and that's going to see ETH continue in the broader journey to perhaps 14K that it has ahead of it, sort of signaled from the breaking of this capping grind line. BTC Dom very much following the path that we've set out for it. We look at markets in phases. We believe this is phase 3. You now have phase 4, like illustrated here, ahead of you. And this is at a time when, this is going to break. This is a bear flag. You're getting downtrend in BTC Dom, which is bullish for everything. I want to talk again about the kind of macro backdrop of things. We're going to listen to what Mike Wilson has to say and how actually he's right. It's not just us that use technical analysis. It's also the big firms and institutions like Morgan Stanley. And he's correctly highlighting, and we'll show you this to be factually evident, every time, and we've said this ourselves, the S&P dips by about 20%, that bear market territory. If it can entirely retrace it, it will then go on to continuation for a period of years. And that's what we've got ahead of us. Great macro backdrop. Let's dive into what Mike Wilson said again and recap on it. And then we're going to look at what I believe, who is it that said this? Wells Fargo, Mitchell Schumacher, essentially says about a rate cut coming in September and why this is going to propel the markets. We'll see. Let's dive into what Mike Wilson has to say.
We think that's a new bull market, right? We think the bear market ended. This gets back to our overall thesis, Matt, which is that we believe we've been in sort of a 3-year rolling recession, and that the end of that recession ended in April with the tariffs. That was the final capitulation. So we think that's a new bull market, right? We think the bear market ended in basically April. It was a pretty nasty one. There were several, along the way, and that was the final flush. And now we're in a new bull market, and capital markets activity is just another sign that analysis or that conclusion is probably correct.
What I want to do is show you technically why he's unbelievably spot on. So first of all, let us perhaps just address the bear market that he spoke about, and we'll do that with our normal S&P chart. This is the bear market. It was a 20% plus pullback, 21, 22%. And we've entirely engulfed it. And we've said technically that means you're back on the trend and continuation as expected. If you look at every time the S&P has had a 20% plus pullback, if it successfully retraces it, and we're going all the way back to 1981 here, you end up with a period of continuation for a year plus. And that's what I think's on the cards. That doesn't mean we're not going to have pullbacks along the way, but the broader trend for the S&P is up. This is going to be driven by money proliferation. There's a great squeezing taking place of you via taxation, via inflation, and so on and so forth. Interesting take on the PPI, 0.9% for last month in the United States. Times that by 12. There's a lot going on, but crypto is an essential part to everything in regards to a lot of things. But Mike Wilson's absolutely technically spot on. This gives us a really bullish backdrop in regards to risk assets moving forwards. Bitcoin is going to outperform. Technically, we think it's in a good place. You've just got to survive the months or this month that we're nearly on the back end of, August and September, before we enter a pretty sensational October, November. One catalyst that Wells Fargo is highlighting is a 25 basis rate cut. Not because of necessarily significance of the size, but more because what that's going to signal to the markets. Let's end on this take.
Get a 25 basis point, 0.25% rate cut, and then no talk of more rate cuts. Does that matter to the market?
It does matter to the market, and here's why. Let's say that Powell comes out, not Friday, but Sep 17, Fed goes 25. He takes the podium at the press conference and says, well, look, we're not going to do this too many more times. Trust me. Nobody's that good a salesperson. The market's going to say, hey, guess what? Now we have an easing cycle. There are going to be more, 2, 3, 4 more rate cuts, whatever the number is. We in the market will price more of that. Bonds will run. Equities do well. I don't think Powell can really put that genie back in the bottle. The Fed may turn out to only do one cut, but that's not the initial market move. It's a big rally.
What we do when we analyze the markets is stack probabilities in our favor. And it's far more probable outcome that it's a good macro environment like the one we've suggested, and it's taken place thus far, and that crypto is going to just perform in this kind of insane manner in terms of multiples and under that backdrop. Certainly with everything fundamentally going on. We'll be doing a video on that later on today. Now the Fed has officially integrated their ISO standards. That's it from me, guys. I'm going to love and leave you. Always a pleasure. I'll see you all in the next one. Stay bullish. Weather the lackluster summer doldrums, and we'll see you in the next.